Good evening. Today's Treasury bill auction results are out. As you can see on my screen, we had a Treasury bill auction today with a settlement tomorrow, and this is a week before the Treasury bond auction, which is next week. And one of the reasons we pay attention to how the results of the treasury bills are, because most times it's the first strongest signal on what we might have to expect or anticipate in the treasury bond auction. So when you see how the treasury bills have performed in the week before the treasury bond, then that is the first strongest signal of the treasury bond auction. And as you can see, for this week's treasury bills, the effective yield across the all the three tenors have reduced compared to in Feb and compared to Jan of this year and compared to December of last year, but it's still relatively high because for a 1 year treasury bill, we are still in an effective yield of 14.752%, and for 182, which is the 6 months, of 13.55, which still shows it's good, but you have to start understanding that okay, the rates are down and that's important as you anticipate for the treasury bond auction coming up next week, especially for those of us who are going to invest in the treasury bond. And to demonstrate that, you have to come back to the January treasury bond, the January treasury bill, the one which was before the treasury bond that had the highest yield to date. So for that one, the yield in you can see this was in January 2025, and the market at that time gave us an effective yield of 15.254 for a 1 year treasury bill, for 6 months 14.496, and for 91 10%. So that means from a 15.254% to currently 14.75%, that is an indication that we have lost. If I'm to add here, it means in just a space of 2 months, we have a 50 point basis we have a 50 basis point reduction in a 1 year treasury bill tenor. And now if we already have that in the treasury bill, that automatically sends the strongest signal on what to anticipate, you know, because all of a sudden you have to be like, okay, if in March this is what I'm getting, and in Jan this is what it was offering at the time, then automatically then you have to be in a position to say, okay, what's going to happen in the treasury bond? What does that mean for the people who have invested in the treasury bills and the treasury bills this week? It comes back to this computation here that I'm bringing onto the screen. um, for those of you who have invested in today's treasury bill, of course, like we have said, the yield, that column there, that is the most important column. When you have If you have been following me for a while now, you will know, and I always say, when it comes to investment, that is the most important column, right? For the 364 days, it's 14.75. It means for someone who is trying to buy a treasury bill of 10 million, yes, if you wanted to buy a treasury bill of 10 million, you paid a price of times 87. So you paid a price of 8.777, you know. So that means your actual discount is the 10 million minus 8.77. It's the same for the person who bought for the 192 days. And you're going to ask yourself, where am I getting these prices that I'm linking it to? and I'll show you I get them from this form from Bank of Uganda for today's auction, as you can see. So coming back to this is to say that, and for 91 days, which is the 3 months, it's that one times. One thing you have to always remember when it comes to treasury bonds is we buy them at a discount. So you pay less than what the face value is of a period of time, such that at the end of the maturity, you get the face value of the bond minus the withholding tax. So from today's auction, for someone who bought a 10 million bond, they had to pay 8.7 million, which means their discount on the market was 1.28. And how do we get that? I'll hide some of this such that you can see it on the screen fully. How are we getting the discount? Is the face value you will get after maturity minus the cost. So the discount, that this is the discount and it's the profit you will make in a year. For the 6 months, this is the profit. For the 3 months, this is the profit for the different bonds that you would have bought. You know, so what that means is that at 1.2 million before tax, do not forget treasury bills have a 20% withholding tax. So that means for this income, this is the profit you are going to make. Then you pay withholding tax, and then this is the profit after tax you make, which brings in a net return of the profit versus the amount you have invested. Remember, you did not invest the 10 million, you invested 8.7 million. Remember, you did not invest 50 million, you invested 43 million. That's the cash you put into this. So this is the profit after tax that you end up making from your investment, which has a net yield of annualized yield of 11.8%, and for 6 months around 10.4%, and for the 91 days around 9.2%. Like I said, it's the annualized yield, you know, annualized yield. It's not this. So that means that's why you see for someone who is going to buy a 10 million bond, they have to pay 9.7 million for the 91 days, and they'll get a profit of 270 to 278k versus someone who gets 1.8, 1.2 after a year, and the tax and the after tax profit. So as you can see, that is um, that is the return you would be making. But one important thing is that whereas we are starting to see yields at 14.75%, it's still as high as possible because you only have to come back to go to around June 2024. June 2024, that's how many, 9 months ago, to realize that 9 months ago, the effective yield was 13.5. So that means whereas we are starting to see a drawdown of interest rates coming down right now, it's still higher than they were 6 months ago, 9 months ago, and even 12 months ago. So for those of you who are entering the investment bond right now, you are entering at a time when interest rates are still attractive and at the time when you want to still be in them. Now, having established that, then you have to understand, appreciate, and say, okay, if the March Treasury bills have a 14.75%, and in Jan we had 15.24, then what will happen to the Treasury bonds? In the Treasury bonds, in Jan, we had 17.89 for the 20-year bond, for the 10-year 17.10, and the 3-year 16.5. Now, I will tell you at this point, it's going to be extremely hard for us to see these rates coming back in the next week. It's going to be extremely hard, but it's going to be better than those in who invested in Where is it? In December 2023, a year ago, yes, almost 13 months, 14 months ago, the interest rates were 15.99. You can see this was a treasury bond of the 20 year. This exact bond, you can see it had a yield of 15.99 still. So that means for anyone who's going to invest in the next 2 weeks, for as long as we get a 16.5, you are still getting much more profits than someone got when they invested a year ago. So for you, do not be despaired, do not be discouraged because interest rates are going down, then you want to kind of take a break. The treasury bonds are still profitable. The treasury bonds are still making money, which also takes me back to this, which you would want to kind of see. Yes, we are seeing a cyclical nature. We are down. As you can see, this is the 20-year bond that is coming back on the market. You can see it reached 18 plus. Now it's about to go down and it's going to continue down, but it's still above 16.5. It's still above 17, which still makes it an attractive investment strategy. So today's auction results are an indication of that trend, which we have been talking about. Falling interest rates, falling yields across the different tenors of the treasury bills and treasury bonds, but at the same time, it's still high enough for you to make that investment decision. It's still high enough for you to put in money for long term. And for as long as you're investing for long term, stay away from treasury bills. But for if you're trying to invest for 1 year, 6 months, treasury bills are still attractive. As you have seen, the effective yield after tax is still above 12%. Not so many things can give you that return in just 1 year, and you get back your initial investment plus the profits. Thank you so much.